got a question for you, Matt. And
Yep.
so Sharpe ratio, there's a debate straight off of whether that's even an appropriate way of assessing Bitcoin returns. And
It's not. Yeah.
and I can think of a number of reasons why it isn't. So I guess you've kind of answered part of my question. But if it's not, why not? And how do you assess kind of the risk versus return profile when it's so asymmetric?
Yeah. So so the Sharpe ratio is in our mind suboptimal purely because it penalizes volatility up and down, right? And so naturally, the hope and expectation is that the vol will exist certainly to the upside, and even in a relatively kind of call it hedged or opportunistic format, you can still capture a decent percent of the ups while mitigating the downs, and you don't want to be penalized for that because your Sharpe maybe is going to be a little bit less appealing, but your Sortino is going to look nice, right? So we think about risk adjusted more in Sortino terms. Even Kalmar, for example, could be interesting for this space where you're just looking at the annualized return vis-a-vis a peak to trough drawdown, which could be another way of thinking about things, which we do. But I agree with you, Sharpe is not the appropriate metric here.
So would you say Sortino, given the
Yeah, that's the way we think about things is Sortino. We measure ourselves in Sortino terms, not Sharpe terms.
That makes sense.
Get the ulcer in there too. Anyway, moving on.
But I guess to just sort of put a bow on that earlier question that I had, other than Bitcoin, Matt, maybe you take this one first. But since you're looking at the space as a whole and looking for arbitrage opportunities, what are the other interesting coins that you're looking to speculate? If you're so inclined to speak to talk your book up a little bit more.
Yeah, no, I mean we're not. This will be a quick answer for Rob. I know he's smiling over there. We're more interested in the trading aspect, right? And so we're not wedded to any particular coin. We think there are some interesting emerging theses around DeFi, for example, which could be interesting. But again, it's all for us. It's a trade, and I think that means we gravitate more towards the top 10 coins. And again, we're interested in folks that are just trading them, right, and arbing them. And we're not here for the buy and hold. We're not here to sort of underwrite a thesis around, ETH as a platform and vis-a-vis Bitcoin. We're just here for folks that are extracting inefficiencies, and that's what we're focused on. So I'm afraid I don't have a super interesting answer there, but maybe a little bit more to say than Rob, who I know is just going to say buy Bitcoin and call it a day.
No, well, look, actually, I can be a little bit more nuanced than that. So I accept that there's absolute inefficiencies in the space. I mean, it is nascent. All the reasons that you kind of mentioned, right? Like it is ripe for exploiting those. So I accept it. I mean, does that give you exposure to the space? I think there may be fundamentally different things. There's nothing wrong with that. It's just what are we getting exposure to? Like you trade, you could arbitrage. You could pretty much pure arbitrage Bitcoin for quite a while. Even in the last run up, there was big premiums in South Korea and other places. So and people were doing that, right? You had guys running across the border from South Korea to Hong Kong with Rolexes and stuff. I mean, it exists and it will continue to exist for people who have the tools and insight that you guys have. But if you're arbing out those inefficiencies from day one, you probably would be not any better off in absolute terms for sure than if you just hodled. So there's a lot of nuance in between that and Sortino ratios and risk adjusted returns. So I don't think we're necessarily disagree. I think it's just what kind of exposure do you want? How do you use your exposure to crypto? I like the fact that you're not trying to take a kind of a naive diversified approach and saying we're going to hold a basket of the top 10 cryptos because, the top 9 cryptos probably don't have a use case, in my opinion. And that's a reason why they keep turning over every couple of years.
Yeah.
It's a lot different than holding a diversified basket of stocks and companies that have proven businesses or something that they're doing that adds value, or other than just issuing a token and creating kind of a Wild West speculative market. So I appreciate that orientation. And yeah, there's folks that are doing it, and they should do it, right? Like it's going to take a while to mature the ecosystem.
Yeah, and I view it at more. I mean, you bring up a good point around. Does that make sense to solve for exposure, right, to the space?
Exactly.
And we don't view our job to come in and speak with clients around the notion of here's why you should have exposure to the space, right? We don't think about things in terms of let me tell you what Bitcoin is and let's go through this whole educational process. We think about it purely in terms of risk return. That's it.
Yeah, which is perfect.
These are just numbers on a screen. This is another asset class to trade. And the one thing that I find, a little bit challenging, of course, is there's plenty of investors that think about things in terms of, we don't invest in things we don't understand, right? And of course, they want to get educated, which is great. But it's just kind of interesting because there's you encounter these investors who had lots of exposure back in the day to CDOs and CDO squared and so forth. And there's plenty of things that they have exposure to that they don't understand. And our point is we're trying to sort of disarm.
But Goldman sold it to me, so it must be good.
Yeah. It's like in our minds, of course you should try to understand and become educated. But for us, it doesn't require a ton of technical proficiency. You just need to understand, look, this is an asset class to trade. These are numbers on the screen. A quant is a quant, and ARB is an ARB.
The underlying something different. You don't have to care about that. It's all settled off, into fiat, and So I think we absolutely see eye to eye on that.
Yeah.
If you can get someone to just give me a call and explain the derivative books of any one of the banks, just so that I can understand it before I invest in a high dividend, safe company, please have them give me a call.
Yeah, I'm still waiting for that too.
By the way, is Mike speaking? Because I can't hear him at all. So I see you guys nodding. And I'm like, are you guys reading something?
Yeah, he is speaking. He was
Okay.
commenting on the derivative books of the banks.
Okay.
And how much he'd love to understand them, as we all probably would.
Right. On that note, gents, it seems technology might be getting the best of us. So I want to say thank you to both you, Rob and Matt, for taking the time. I know we've taken hour and a half of your time today, and it was great. I mean, it's a nascent field. I know close to zero about it, so it was a great learning experience for me. I hope everyone is watching, listening did as well.